I know some people won't like what I'm about to say. Some will call it too simple, others will say it's too philosophical. But that's fine because I'm not here to please everyone. I'm here to show you a way of looking at money, history, and investing that actually works. And if you stick with me, you'll see why the blueprint I'm about to share could save you years of trial and error in the markets. It's on record that throughout history, the biggest fortunes weren't built in times of comfort. They were built in times of chaos when most people ran, a few leaned in. It's on record that markets move in cycles, just like civilizations. And if you can read the rhythm, you can prosper. And it's on record that behind every trade, every empire, and every fortune lies the same principle: discipline over emotion. So let's get into it. Everyone talks about options. You've probably heard stories people making millions overnight, and others losing their entire accounts in a single trade. But what exactly are options? Let's strip it down to the basics. At their core, options are contracts. They give you the right but not the obligation to buy or sell a stock at a certain price within a certain period of time. Think of it like reserving a seat at the table. You don't own the table yet, but you have the right to sit down whenever you choose before time runs out. There are two main types. Calls. These give you the right to buy a stock at a certain price. If a stock is 50 and you believe it will rise, you might buy a call at 55. If the stock goes up to 70, you don't have to pay full price. You already locked in your seat at 55, and the difference is your profit. Puts. These give you the right to sell a stock at a certain price. If that same stock is 50 and you believe it will drop, you might buy a put at 45. If the stock falls to 30, you can still sell at 45, pocketing the difference. Sounds simple, right? But here's where people get lost. Every option has three key components: strike price, the seat at the table price you locked in; expiration date, how long your reservation lasts. Time is not your friend here. Once the date passes, the option vanishes. Premium, the price you pay for the contract itself. It's like a down payment to play the game. Now, here's where philosophy comes in. Options are a mirror of life. You're betting on potential, but you're also fighting against time. You can be absolutely correct about direction, but if you run out of time, you still lose. That's why patience and timing virtues taught by every philosopher, from Seneca to Confucius, are essential here. Two forces always govern your trade. Delta, how much your option changes in value as the stock moves. This is your progress, your acceleration. Theta, how much value you lose each day as the clock ticks down. This is entropy, decay, the inevitable erosion of time. Think of delta as the growth of a tree, and theta as the slow withering of its leaves in autumn. If you plant in the wrong season, no matter how fertile the soil, time will eat away your harvest. Now, let's get practical. The blueprint. Step 1. Pick quality. Don't waste time chasing hype. You wouldn't build your life on weak foundations, so why would you bet your money on weak companies? Look for businesses with strong balance sheets, proven track records, and the ability to adapt. Companies like Apple, Amazon, Nvidia, or Tesla have shown the ability to not just survive downturns but thrive after them. That's the kind of soil you want to plant in. Step 2. Study the 52-week high. Just as empires have their golden ages, stocks also reach peaks. The 52-week high tells you the most a stock has been worth in the past year. Write it down. Keep track of 10-20 quality companies. Step 3. Wait for the pullback. When one of these stocks drops 15-25% below its 52-week high, most people panic. That's when you prepare. Remember, fear is temporary, but cycles are eternal. Step 4. Place your call. If a stock was 100 and now it's at 80, don't demand it jump back to 100 immediately. Instead, place a call 10% above the current price, say at 90, with an expiration date at least 6 months away. What you've done is given yourself time and a reasonable target. You're not asking for the impossible, you're asking for the cycle to continue. Step 5. If it drops further, don't panic. Add a leg. If that stock falls to 70, you simply place another call, this time at 80, with the same expiration. Now you've layered your position, and as long as the company is quality, history tells us it will recover. But let's pause for a moment. Options can be thrilling, but they can also be dangerous. You can make extraordinary returns, but you can also lose your entire premium if you treat it like a lottery ticket. And that's where most people fail. They gamble. They bet against time without discipline. The truth is, options are not a get-rich-quick scheme. They're a tool, a lever. A lever can lift a stone, but it can also crush your hand if you use it carelessly. Ancient philosophers warned against hubris, the arrogance of thinking you can outsmart nature. The same applies here. Respect the tool, respect the risk. So let me leave you with this. Options trading is not just about money, it's about philosophy and action. Patience, giving your trades time to work. Discipline, only betting on quality. Perspective, understanding cycles, highs and lows. Courage, entering when others are afraid. These aren't just market principles, they're life principles. And if you master them here, you'll find they echo into every part of your journey. This, family, is the Why Machine. We're here to bridge the gap between money and meaning, between ancient wisdom and modern markets. If you found value in this lesson, do me a favor. Like this video, share it with someone who needs to hear it, and subscribe to the Why Machine. Because the deeper we go, the more you'll see the past, the present, and your future wealth are all connected. Do you want me to expand this even further into a full teaching flow video, breaking down more examples, analogies, and common mistakes beginners make, so it could run closer to 10-12 minutes?